Welcome to this webinar. This is on tests of a winning strategy. I'm Goutam Challagalla, Professor of Strategy and Marketing here at IMD. And, I lead the Strategy for Boards program. So this is for board members to help them assess on the companies that they're serving as board members. How do they know their company has a good strategy or not? This is a passion of mine, strategy as a topic. I worked for a consulting company at one time called Monitor Group, and Monitor Group is now part of Deloitte, and I've here been at IMD for about 6 years. And in addition to the Strategy for Boards program, I also lead a program called Advanced Management Program. So this is for people who aspire to be general managers or are already general managers. I also lead a digital marketing strategy program. So enough about me. Today is all about, what is strategy and why is it so tricky to think about creating a winning strategy? So what I wanted to do is really focus on how do you know you have a good strategy and give you some tests that you can use for figuring that out. So that's really the purpose of what I'm going to do here. We'll just set the stage here, an introduction in terms of profitable growth. Then why is strategy so difficult? Why has it become so complicated these days? Then we look into what is strategy and some tests. I'm going to give you some tests that McKinsey, for example, has designed. And then I'm going to give you my own tests, which are 7 tests of a good strategy. So that's really where we will go today. By the way, I have with me here in the room Thierry, who will monitor the chat. So if you have some questions, make sure you put them in the chat. I'll do my best to cover them. We have only about an hour. So I'll do my best to cover them, but we will be monitoring the chat. Since I cannot see you, we will monitor the chat. So if you think about profitable growth and you say, what percentage of companies that are publicly traded on the stock market? So these are not private companies. They are either on the New York Stock Exchange or the DAX or in Shanghai, whatever, right? These are publicly traded companies that get both profit and growth over industry average for a 5-year period consistently, a 10-year period consistently. And if we look at the numbers, in fact, one of my colleagues wrote a book on this several years ago, and the numbers are kind of sobering. It's only 24% of companies can do this in a 5-year period. Right? And if you look at 10-year period, it's only about 5%. Evan, I will definitely define what is strategy very soon. I'll give you my perspective on what is strategy, right? So over a 10-year period, it's only 5%. Very often we get either profit or growth, but not both. And then actually 39% don't get either, right? They're barely surviving and they're below the industry average. That means they're not doing as well as the peers. So this is why strategy is difficult. And we also know that the lifespan of companies is shortening and so on, right? So, but what makes strategy so difficult? There's a few things. These are some hypotheses that I have in terms of what makes strategy so difficult. One is just the number of books, the number of frameworks, the amount of new terminology that is introduced is staggering, right? It is shocking. I think sometimes all these new terms and all are used just to keep consulting companies and perhaps business schools in business. Right? Everybody wants to know the new term. And you can just see over the years how many new terms have been introduced, and it's adaptive advantage, transient advantage, strategy as simple rules, blah, blah, blah. I mean, there's just no shortage. So I think For anybody who's trying to think about developing strategy, it can be kind of drowning. It can be kind of a difficult experience. Two is there's the flavor of the day, right? A great new book is written often because somebody is trying to fill a gap. But that new book thinking takes over, even though it is probably not comprehensive. But it's the flavor of the day. Everybody's talking about the book and we jump on it, but we lose sight of everything else. So that's another reason why strategy is complex. A third reason why I believe strategy is complex is there is not one strategy in a company. Often there are several strategies. Okay, it's not one. In fact, you can think about this as levels of strategy. If you take a company like Nike, for example, there's a corporate strategy, which they call as their triple-double strategy. They want to double the impact of innovation, double the speed to market, and double the direct connection with consumers. Right? That sort of set the overall frame. But then there is business unit strategy. And by the way, it's not just one, right? You can have a strategy around products, footwear, apparel, for your geographies. Each geography is going to have something, right? Then you have markets. This was very key for Nike. They had golf, basketball. And so, it's not just footwear, it's footwear for basketball and so on, right? So this is all, and this is how Nike was on. Each of them, in fact, this was the main organizational variable for Nike. Their main thing, you take the CEO and then you look at the next level organization, it was around this. But it doesn't mean geographies are not important. By the way, you have strategies for your customers, right? Wholesale strategy, your retail, depending on whether they are specialty shops or sporting goods stores or department stores or general merchandisers. And then, of course, they went direct roughly, by creating their stores. So there is that level strategy. And then there is functional strategy. Different functions often will have their own path forward. All of these somehow need to link. And that makes strategy, again, a little bit complex. So all I'm going to try to do is to try to simplify this. Let's forget about the buzzwords, forget about all that. Let's just think about what is strategy in a very simple way. And I think, Ivan, you're probably right. Some of this complexity and introduction of new words is to cover ignorance, perhaps, And so what is strategy? This is one definition of strategy. I think there is a lot of convergence, whether it is executives, whether it's consulting companies, whether it is business school academics, who agree that strategy is about making choices that give you some kind of a favorable position in the market. I think everybody more or less agrees on that. And so at least that's sort of how I think about it, right? It's about making some choices and it gives you a favorable position. So if you want to make these choices, there's going to be, some trade-offs. There's got to be some alternatives, right? I'm either choosing to go after a small base of customers or a very large base, etc. So I'm going to make some of these choices, and those choices require trade-offs. But here's something I'm going to say, and you may agree with me, may not agree with me, but I kind of believe it, And a lot of times when you make these trade-offs, they're often irrevocable resource investments. Okay? Not easy to change. Nothing is permanent. By irrevocable, it doesn't mean you can never change it. That's not the point. Irrevocable means not so easy to change. If that is the case, then you are actually making some trade-offs. So you may say, well, today is all about agile. You got to move from here to here. Well, Amazon and Alibaba are extremely agile, extremely fast-moving companies. But guess what? Amazon has over 40 billion in fixed assets in just warehouses. That's a big commitment. Amazon is making a massive bet on that. Amazon is investing 5 billion a year in developing new content. Those are big bets. They don't change overnight until you decide to completely change your portfolio. So don't for a moment confuse agility with choices. And I'll clarify this as we go through this. Okay? Because people think you can be so agile and you can move tomorrow. There's nothing Amazon can do tomorrow with these 100 billion, actually 40 billion in fixed assets on the ground. They're stuck with that for some time. There's nothing they can do about it. When Microsoft says, I'm going to go into cloud, and I'm taking technology companies here because technology is the fastest moving space. I'm going to make a big bet on the cloud. When their CEO Satya did that in 2014, they moved overnight from their enterprise business to the cloud business 1,000 people. They retrained their sales force. It took a couple of years to do that. They've deployed thousands and thousands of salespeople behind this. You cannot change that overnight. That's a big bet. For Microsoft, fortunately, it's a big bet that has paid off. Right? So don't for a second confuse agility for this. And I'll talk about 3 types of agility as we go through this. Okay. Now, in fact, sort of based on this definition, maybe not exactly this, but others have written about what are tests of a strategy. There was one in Harvard Business Review about a decade ago. This actually came out in 2011 that said, there are 5 tests. What I like about it is just 5, right? It's not 15. That's nice. And there are things I strongly agree with this one, like you got to have a distinctive value proposition. I think that's a great test. But there are others that I don't know what's a tailored value chain in today's world when we're moving into asset-light models, for example, right? So, are you making some trade-offs is again differentiation, which I think is similar to this one. There's a fit. I think the notion of fit is a good one. There's continuity over time. How long? Not very clear, but some of these tests are pretty good. Others are a little bit fuzzy in my view. Okay. Then McKinsey actually came out, I think this was also about 10 years ago, saying, hey, there are 10 tests of a good strategy. And what they say is 65% of companies meet 3 or fewer of these tests. Okay, that's McKinsey's statement. Frankly, I think this is not very good. Some of the tests are pretty decent, but many of them, I don't know who wrote this. I don't fully agree because they're confusing what are tests of a good strategy with some of the things around execution. So let me give you some simple examples here. Is your strategy contaminated by bias? How do you know that? How do you know that? We all have our biases. Who can actually design a test to say, is your strategy contaminated by bias? Does your strategy balance commitment and flexibility? No, it's okay, maybe. I like some things like, is there a true source of advantage? Evan, I have to disagree with you. I think the true test of a strategy is results. I have to disagree here only because you may have a damn good strategy, you may not be implementing it very well. Right? So if you say only things that work are great strategy, that's a little bit of a problem. And that's what I want to separate also, because then only companies that do great have good strategies, and companies that are doing average, that means they can't have a good strategy. No, there may be many other reasons that are going on, right? Is there conviction to act on your strategy? Frankly, I'm not so convinced with some of these tests, right? Does it rest on privileged insights? So I think, they're confusing few things. The privileged insights, exactly, and this and these are probably highly correlated. Okay. So that's problematic. You don't want things that are highly correlated, because why have them? I could reduce some of them, right? So I think, take it for what it's worth. What I want to also do is to present what others have done, so you can pick and choose at the end of the day what is favorable to you. What I want to walk you through next is 7 tests of a strategy, but I'm not going to dive into the tests. Instead, what I'm going to give you is a history of strategy and tell you why I designed these tests. Actually, not just me. It was my PhD advisor, who I work with very closely. That's really a combination of our work. So if you think about a very brief history of strategy, the word strategy did not exist in business till the 1950s. So James Oscar McKinsey, who founded McKinsey in the 1930s, he never used the word strategy, right? McKinsey is, I think most people would agree, the number one strategy consulting company in the world. He never used the word strategy because it didn't exist in business, the word strategy till the 1950s. What happened is, in the 1950s, post-World War, and those days it was mostly men, after the war, they went back into regular life, right? And when they went back into regular life, one of the first things they asked when they went back into the company is they said, when we were in the military, so that first wave of strategy thinking was influenced through military thinking. Before that, in the 1910s, 1920s, it was all about just improving operations, right? Because there was so much inefficiency. We were just trying to improve operations. How do I make a car a little bit faster, a little bit better, a little bit higher quality? That used to be the focus. So the first wave of strategy was really influenced by military thinking. Okay. So this was about people who came back from the military, came back and started saying, hey, in the military, we had words like vision. We had words like mission. How come? And that gave us direction. We knew what we needed to do in the long term. What's our vision? What are we trying to accomplish in the long term? And then what do we need to do to get there? And then we needed some short-term goals as well. That is how these words came in. And then they had a strategy for the Army, for the Air Force, for the Navy. And that's they said, that's like levels of strategy. And this thinking is originally captured. By the way, if you go into the late 1960s, believe it or not, there were only 3 books written on strategy, just 3. And one of them was by Kenneth Andrews. I don't think you can see it. But that's how these words came in. Now, what's interesting is today's modern world, if we fast forward from the 1950s all the way down to the 2020s, the words vision and mission often exist, but they're many times being used interchangeably. For some reason, some companies prefer the word vision. Other companies prefer the word mission. Yet others today are using a more modern word, which is purpose. Okay. These 3 are being used either interchangeably, or sometimes a company will say, I have both a vision and a mission. And sometimes they mix the 2. Sometimes they use mission instead of vision, and then vision instead of mission. Okay, so now your head is probably spinning already, saying what's a vision, mission, etc. So let me just give you, for example, how Amazon looks at it. And this is relatively consistent with how people have looked at it traditionally. And today you can call it a purpose in some ways, right? Vision and purpose are being used by far the most interchangeably. But not everybody, as I'll show you some examples very soon, is Amazon says we want to be the Earth's most customer-centric company. That's our vision. That's where we want to be. Everybody should love Amazon for its customer centricity, just ease of doing business, for example. Very easy to get great customer service, for example, right? And they want to be the place where you can come and buy almost anything. It's very broad. So again, we can ask a very serious question. Hey, is this nice on a wall, or does this really provide you direction? Because that's what it should do. It should provide direction to your employees and other key stakeholders. Your customers don't always need to know it. If some of them know it, that's great. Depends. And today, some companies try to make their purpose more public. But it needs to provide energy in your business, right? So this is Amazon, and then they say our mission. How are we going to get there? So vision is long term. This is how do we get there? What are the building blocks, right? So they say we're going to get there by focus relentlessly on customers, the strength of brands. We're going to invest very heavily in IT systems and infrastructure, and of course, we're going to do this in a particular way. Now, other companies have actually left the words vision and mission, and they're just using the word purpose. Coca-Cola is a very good example. This is their CEO of Coca-Cola. Late 2019, in December, he wrote a letter to all the employees and also to external stakeholders saying, listen, the purpose of Coca-Cola is the following. It really hasn't changed very much, but the purpose is to refresh the world and make a difference. I don't know about what make a difference means, but certainly refresh the world is simple to understand, and that's Coca-Cola. And so if you think about Coca-Cola, they've gone away from just pure sodas, right? Carbonated sodas like Coke and Fanta and Sprite into things like more recently Costa Coffee and so on, because coffee is also refreshing, right? So some companies are using the word purpose. This is much more as a big direction thing, right? And here are some other examples I just pulled out. I like Zoom. By the way, Zoom uses the word mission. And I like Zoom because they say, our mission is to make communications frictionless. So when I think about Zoom and I think about their mission, okay, they like the word mission. I get it. I get it as a customer. I love it because of that. Bullshit factor is very low. Okay, I love visions or missions or purpose, however you want to call it. I like it if the bullshit factor is low. Bullshit factor is low if your customers get it. Bullshit factor is low if it energizes your employees. They know what it really means. You can judge for yourself. Here's a professional services firm. Their purpose is to build a better working world. So the only way to know whether it's good or bad is if you pull out 25 employees in the companies and say, do you know what that means to you when you wake up every morning? I don't know if they will or not. I don't know the answer to that. I just found this and I'm presenting it there. So you need to pay attention to, is this really clear or is this a lot of fluff? Everybody needs a purpose, so I've created a purpose, Peloton, right? Raging hot company. But when they said our purpose is to sell happiness, that's very high on the bullshit index. Okay. Now, they have a mission, and that makes a little bit more sense to me. Much more clearer, right? We use technology and design to connect the world through fitness, empowering people to be the best version of themselves anywhere, anytime. I get it, and I love it. I love what they've got as a mission. I hate what they put as a purpose, because the purpose of creating happiness, I go in the morning to work. Oh, my job is to create happiness. It's very hard to understand, right? By the way, this is Spotify and this is Mars. This is Spotify and this is Mars. I like Mars. Mars is good. I think Spotify is halfway there. Pretty decent, I think. But so my first test of a strategy is, do you have a purpose or a vision, whatever word? Some have used mission, as you can see, that provides clear direction. So that's the first test. Then what happened is, in the 1960s, many companies started expanding. We had a post-World War boom in the West. So it didn't happen uniformly globally, but certainly in Western countries, there was a post-World War boom. And you saw many giant corporations actually starting to emerge. Okay. And as you saw these giant corporations emerge, something very interesting happened. Harry Markowitz was a professor of finance. By the way, Harry Markowitz won the Nobel Prize in 1990. And he didn't do anything with business. What he did is, Israel, stop it, it says. So are you talking about me stopping or something else going on that I'm not aware of? Okay. I'm going to continue. I don't know if there's something going on in the chat that might be bothering you all, but hopefully it's not something that I said. Terry, is there anything that I need to be aware of? Please let me know. Okay, so what happened is Harry Markowitz came up with how to assess risk and reward for a portfolio of financial investments. Breakthrough thinking about how to balance and have the right portfolio. So, the stocks that you've invested in, for example, are not too much in risk, and then you'll sort of lose sight of, you might be taking too many risks, right? And so that's sort of what was Harry Markowitz's work. Now, very interestingly, a name that you may be familiar with, James Henderson, who was the founder of BCG, or Boston Consulting Group, which, perhaps after McKinsey, BCG is, the number 2 maybe strategy consulting company in the world. And what he did was, he took the ideas from Harry Markowitz's Nobel Prize winning work and said, companies need to think the same way. Companies also need to be thinking about portfolio analysis and management. You might be, if you think about some of the businesses of today, right? Think about some of the businesses of today. I think I'm getting a little distracted by the chat, but continue to chat. If there's something that I need to respond to, Thierry will. So sorry, I'm going to just focus now on y'all. If you think about some of the large businesses of today, you need to take a Samsung, for example, a Siemens, or any of these companies, Alibaba, for example, right? Think about the large companies of today. There is an issue of, do I have the right portfolio? What does that mean? I need to have the right balance between businesses that are less risky and are generating cash, and businesses that are are somewhat risky today, but are going to be generating cash in the future, may not be generating cash today. And that was the idea that he brought into the business thing. And so you can see like the BCG matrix, but what's interesting is everybody knows that it's important to have the right portfolio. Yet, most businesses, this is just the BCG matrix, right? We all know we need to have some that are cash generating, some that are, going to grow like crazy, etc. We know that we need to have a good portfolio. But what's very interesting is, here's what the research shows. This is some very good research by McKinsey, where they show that how much you reallocate your portfolio makes a huge difference in your returns, in your performance. So here's a study by McKinsey which says if you are pretty dynamic and pretty active in portfolio rebalancing, you will do far better than your competitors. And this is a key lever for spurring growth. Why? You're taking money from businesses that are stable and putting them into the future growth businesses. That's very important. Guess what? This is a very sobering statistic. 1/3 of companies reallocate a measly 1% of their capital from year to year, and the average is just 8%. That means too many companies are stuck to what they're doing and are not really investing enough in the future businesses. They may be making small bets to convince themselves, but they're not really committing to future businesses very much. Okay. In fact, this is the proof of that. Again, this is from the McKinsey, where they showed that, listen, 1/3 of companies do very, very low capital reallocation. Another 1/3 are doing just about 8% or so. So many companies, this is a big problem. Everybody knows the importance of portfolio. They keep dogs for too long, and they don't do a very good job with portfolio reallocation. It's very fascinating if we see what's going on in the business world today. Companies like GM, for example. GM for the longest time was obsessed about becoming the biggest company. Eventually, the new CEO realized that's a stupid battle to fight. Okay? Even in an industry where there are massive scale economics, right? They realized that's a futile battle because it was taking them into too many markets where they could not be competitive. And so finally, they've started doing some amazing portfolio reallocation. Time will tell whether this is going to pay off, but at least they have been much more dynamic in reallocation. And you can see how they have sort of were in 25 countries where they manufacture, now 9. Even in terms of number of countries, actually they've exited a lot of countries since then. Okay, so you can see a 34% to now 16%. Okay, Siemens doing exactly the same thing, right? And so portfolio is the second thing. So if the first one was about purpose, the second is about, and I use general words here. When I say right portfolio of businesses, it is a portfolio that is balancing cash generating businesses, but is heavily investing in businesses of tomorrow. That's very key. Are you heavily investing for the businesses of tomorrow, the future? And that's how the portfolio balance should happen. So that's my second test of a good strategy. Then what happened in the 1970s is Michael Porter came along and he said, listen, it's not enough just to have a good portfolio. You can have a portfolio of many businesses. What you really need to be thinking about is creating a competitive advantage. And, he popularized the term competitive advantage, wrote a couple of books on it. And, he said, listen, first, very important, you need to pick where you want to play. Some industries are more attractive, some, and so you need to know the attractiveness of where you're allocating your resources. So he came up with the 5 forces model. Now, the thing is, in today's world, many of these barriers to entry and all, which were powerful barriers before, are going away. Think about the Ubers and the Airbnbs, how they entered. If they had done a conventional sort of industry analysis, looking at the Porter's 5 forces, you would never have entered, for example, Airbnb would never have entered the business, right? So, the idea was valid for a long time, but today industry boundaries have become much more fuzzy. And but the thought about competitive advantage is still relevant today. It's harder to do the industry analysis in the conventional way like we did it before, but it doesn't take away the fact that the important contribution there is you still need a way to win. You still need a competitive advantage. And Porter defined these as cost leadership and differentiation and so on. These words have sort of morphed. Today, people talk about end of competitive advantage, like Rita McGrath talks about it. It's about transient advantage. You have one wave to another wave to another wave. I think there is a high, again, in my view, I'm giving you my humble opinion, there is too much of buzzwordy things. There's too much buzzword stuff going on. What are Amazon's transient advantages? What are Alibaba's transient advantages? I mean, Alibaba has built its core around making it easy for businesses to do business. That's really Alibaba's purpose. We want to be the easiest for doing business with. And they say, how am I going to do that? I'm going to do that by giving you the platform. I'm going to do that by making payments easy. Those are big commitments. Those are not transient. So, sometimes things move very fast. Sometimes things will be there for a long time. So just be wary of getting caught up by the new buzzword and so on. I'm not saying competitive advantages last forever, not at all. You're going to rapidly be thinking. Have the time period for which you have an advantage shrunk? Certainly. And if that's what we mean by transient, that's fine. But you got to keep thinking about, do I have a competitive advantage at the end of the day? And that question is, in my view, very important. So when Amazon says, we want to be the company that is the most customer-centric, that's what they're viewing as a competitive advantage. When Alibaba says, we want to be the business that will make it the most easy for you to do business with, that's a competitive advantage. When Nike says, we will make every person an athlete, and we're going to design things to make it even easy for the amateur runner, that's the competitive advantage. It's been there for 30, 40 years for Nike. When Apple is about making it so easy and seamless across products, across things, that's the competitive advantage. I don't think it went away from day one of Steve Jobs. So be very, about getting too caught up in some of these buzzwords. Yes, if you lose your competitive advantage, I'll give you what you have to be thinking about, Bogdan. Great question, right? So the third test of a strategy is, do we have a differentiation and a competitive advantage? Many direct-to-consumer companies have been launched, and they've done amazingly well, some of them. Take one company like Casper. Casper entered the direct-to-consumer mattress business, right? So bypassing retailers, etc. And they thought, that's enough. Guess what? They had no differentiation. Everything was outsourced. Little bit of R&D, very little. Everything is outsourced. All they became was a pure marketing company. Within months of Casper launching, they had 270 competitors. Everybody's website looks the same. Everybody's app looks the same. Very easy to replicate. So guess what? Casper went IPO and they've gone down dramatically. Because now it's just a marketing game. That's it. Now you might get lucky and be brilliant at it. But in general, if you don't have a differentiation and competitive advantage, it becomes a price game. Which is, by the way, in the case of Casper, they sell a mattress for $1,370 or something, outsource the production, and that production costs about $750. They spend $460 to acquire a customer on marketing. It's just a marketing game. They lose $300 on every mattress. So That's differentiation and competitive advantage. Then what happened in the 1980s is Hamel and Prahlad came and said, yes, you need to know where you're going to play. You need to build a competitive advantage, but you can only do that if you have some core competencies. You got to be good at some things, and you got to build some talent around that and some massive capabilities around that. And this is about what resources do I have and what resources do I need to be building, right? And so this became a very popular view. And, do I have something that is valuable and rare and not easy to imitate, not easy to substitute? These became some of the tests. Now, the key thing that I want to say is, and Bogdan, this will get at your question, you should always think about where I want to play, as well as my capabilities in 2 time horizons. Okay, today and tomorrow. Okay, this is today's business. This is tomorrow's business. Now, it's near impossible for a company to go straight like this. It's near impossible. So you say, yeah, my portfolio needs to include these opportunities, but it's near impossible to jump like that. Usually, if a company is trying to do that, they're being pushed by a crisis. It's very late and they're forced to go there. What you ideally want is that you're pulled by a vision, right? Your purpose. But the path to getting there is very messy. You generally need to build some capabilities. Then you launch some things. Then you build more capabilities. It's not going to get there. So when you think about capabilities and core competencies, you should always do it again in 2 time periods. What I need today to win, do I have the right core capabilities for today to win? But am I investing disproportionately, in fact, in the future capabilities that I will need 5 years from now? Okay. So that's my 4th test. Do we have the core capabilities to win today? And are we disproportionately investing in building future capabilities? So that way, and by the way, sometimes if you find, okay, so let me go back to this previous slide. What's very important, if I just want to tie a few things. Ideally, if I go back to the 60s, the portfolio, etc., and where I need to be playing, etc., ideally what you want is this. These businesses are generating cash for tomorrow's business. But what you need to make sure, and this is the tricky thing, this is the tricky part, is that this business doesn't act as gravity and is pulling future businesses down. They're grabbing everything instead of providing the cash. All the talent is coming here instead of saying, hey, we need to build our future business as well. And we need to have some of our good talent go there. So that's very important. Okay, so this is test number 4. Then what happened in the 1990s is people started coming and saying, the way we are looking at it is like there's only one business model. And that's when in the 1990s, the topic of business models became very hot. Okay. 2 books in particularly were read by almost every business leader. One was The Discipline of Market Leaders by Tracy Wiersma, and then Adrian Slivotsky wrote this book called Profit Models and Profit Zone. And he wrote 2-3 books, and he described the Intel business model, the Disney business model. He broke it out into 15 different types. But the idea of business models became very popular, saying, hey, it's not just one way to get a differentiation. There are different ways you can do it. And I'll just show you what Tracy and Wiersma said. I like it because it's so simple. And basically saying that, if you think about any business, every business in the world is a combination of these three things. Operational excellence, meaning you're trying to win by having the lowest industry cost structure, by then you can bring the lowest prices. Every company is trying to improve operational excellence, right? Second is product leadership. I'm going to give you the best products. Innovation. This is Apple, BMW, etc. And product leadership. And then some are not about the product, but beyond the product experience. Usually end-to-end solutions, what he called as customer intimacy, right? So the low-cost airlines of the world, whether it is a Ryanair or a Southwest Air, probably not a Southwest, maybe Southwest too, or an Air Asia, they're very high on operational excellence, but they're okay because they have a decent network, but perhaps somewhat low on intimacy. Singapore Airlines, on the other hand, would say, listen, we want to, if you're Singapore Airlines or your Emirates or Turkish Airlines, you say, hey, I want to be able to customize. I'll send the car to pick you up. I want to be high here. I want to be okay here, but I'm not going to be the best in operations. Apple, on the other hand, says, hey, I'm going to be great out here. So every business is a combination. And now, by the way, when we think about business models, it's also, how do I make money? Can I go into subscription businesses? That's also part of business models. So, but today we're talking about subscription business, but all these ideas, of course, were born before, right? So my fifth test is, are you thinking about new business models, etc., to drive growth? So that you have energy, you're doing new things in your company. So what's your business model, of course? What's your basis for winning? And then are you thinking about new business? So for example, in professional services, some of the big four accounting firms, we used to call them accounting firms, more like consulting firms today, whether it's a PwC or a Deloitte, they're all thinking about managed services business models. They're getting into, even a McKinsey is getting into data business models. Instead of always deploying people, time and materials, right? You deploy a person, there's a day rate, or you do it by project. Now they're saying, why do you need a tax department? Why do you need 100 people in your tax department? It's not enough. You anyway need to use us. Just have 10, we'll do the rest. Managed services. Next, they're getting into data and subscription business models. So are you looking into new business models actively? Are you exploring the boundaries? Then in the 2000s, people started talking about disruption, right? And there's sort of two ways of disruption. Today we talk about digital disruption, but really, the foundation started with somebody like a Clayton Christensen, undoubtedly one of the greatest. All of these people I'm highlighting here are some of the greatest business thinkers of all time, right? Whether it's a Porter to a Prahlad and a Hamill to Tracy to, Clayton Christensen. And they started saying, listen, strategy is not just looking at this and just trying to get some differentiation, but it's also about changing the game. Can you change the rules of the game? That was Blue Ocean. And Clayton Christensen talking about innovator's dilemma, saying you can disrupt. In fact, many times these low-cost players who you don't look at today, this has happened to Intel, right? This happened to even Microsoft in the PC, in the mobile business. ARM came with a much simpler mobile chip design and completely disrupted Intel. Intel had all the money in the world. Intel had all the talent in the world, yet a startup like ARM is the number one player in chips. Right? Low cost, simple chips, and they took over the market. That was a classic example of Clayton Christensen's disruption. So this whole thinking about don't just do what others are doing, a disruption came in, and also people started talking about ecosystems, building partnerships and alliances. In pharma, the trend started towards outsourcing more and more of the R&D, saying, listen, as many bright people as we can hire, guess what? There are many more bright people out there. It's better to form partnerships with them and make our drug development much faster. And so they started building that, right? So these are examples of a hotel like Citizen M saying, hey, this was typical differentiation before. Before, the differentiation is, hey, 5-star hotel will be high on everything. 3-star hotel is in between. But now you think about, no, don't do it that way. Maybe you will not have a restaurant, even though you're a 4-star restaurant, a hotel like a Citizen M. But I'll be high on some things, but very low on some and very high on some, sometimes maybe even better than a 5-star hotel. That's disruption, right? So blue ocean thinking, all of that came in. And my sixth test is, does your strategy embrace some disruption? Not are you ready for it, because then you might be dragged down, but are you actively building, new concepts, new ideas that can actually disrupt your own model? It might be as a separate entity, but are you embracing disruption? And 2, are you leveraging an entire ecosystem to drive growth? Are you co-creating with customers, competitors, startups, etc.? Then as we get into the 2010s, after the financial crisis and many companies were going bankrupt, then we had digital disruption. And so people started talking about strategy under rapid change, right? And so dealing with uncertainty, the idea of disruption continued, and it kept getting accelerated. Jonas, let's see if I'm going to have an additional test, but I might. You know why these are built? Each of these people addressed a gap in strategy. The big flaw we make is we think just because today somebody's written a book on platforms, all of this other stuff we forget. Huge mistake. Huge mistake. Obviously, somebody who's writing a book on platforms needs to give us enough knowledge on platforms, and they focus on that. But it doesn't mean the other stuff is bad. It just doesn't mean that. And that's why I said, listen, you need to think about, don't forget why all these ideas were created. We adapt and we are, them as we go on. And so this is where the idea of agility and platforms and asset light things started coming into place. And so, these are some of the platforms, right? Whether it is a Shopify or an Uber or an Airbnb, etc., have come into play, right? Now, there are 3 ways you can do agility. There are 3 ways, right? Partly it is about becoming a little bit more agile. Those concepts have become popular. The first way is what we would call as operational agility. This is the ability to improve and change your operations and processes quickly. That's operational agility. So if I have lower fixed cost structures, I'm leasing buildings, I'm using gig workers, contract workers in some cases. So I say, what should I do inside much more aggressively versus what should I do outside? Thinking about that so you can build some flexibility. You're able to do research faster, maybe by using agile teams, etc. Right? But don't get trapped in agile teams. That's just a way to implement things. The most important thing is, how do I improve and change my operations and processes quickly if I need to? So have I already been building things into my cost structures upfront? Have I already been building partnerships upfront? It's not, hey, can I just, change a customer service process quickly? So upfront thinking through that. Second way is Portfolio agility is ability to allocate resources, talent quickly, from less promising to more promising. I'll give you one very simple example. A Danish company called Matas. They're a beauty and health retailer, and they wanted to decide, how do I allocate it's euros, 120 Danish kroners, but I'm putting it 120 million euros is what the CEO had to allocate between stores and e-commerce. Instead of saying, I need to modify, they were planning to renovate about 150 of their 280 stores. Instead of saying, okay, this is the store budget for renovations, and this is the e-commerce budget, what he did is, he said, no, I won't do that. I'm not going to allocate all the money. I'm going to keep the 120 million. Let's first renovate 10 stores. Let's look at the results. I'm also going to invest in e-commerce. Which one is giving me faster growth? That will get even more resources. So he avoided the typical corporate budgeting mistakes. That's ability to create resource fluidity, portfolio agility. He could allocate. Right? Third is strategic. Strategic is simply not that you're changing, bam, bam, bam. It's impossible. How the hell are you going to do that? No company can deal with that much confusion, right? Can you seize new game changing opportunities as they're starting to arise? You may not be first to market, but that's what this is. The last one, because we got just a minute, my apologies. So my 7th test is, I shouldn't call it strategy have agility, but does your company as a whole, not strategy, sorry. It should be, have you built in operational agility, portfolio agility, and strategic flexibility, meaning ability to go after game-changing opportunity. Now, you might ask, what do we do in 2020s? I saw some hypotheses about the pandemic. That's part of it. I think that's already captured in disruption and agility. I think it's all about society. 2020s will all be about society, which means we will come back to out here. What's my purpose? Do I have a purpose that is energizing? I'm seeing some questions come up. As I see them, I will address them. What we mean by strategy and society is, I think we went too far in terms of thinking about value to one key stakeholder. And that one key stakeholder was the shareholders. We went too far because we sacrificed communities. We sacrificed the planet, for example. It was make money for stakeholders at any cost. Now, I think people have woken up saying that is creating lots of inequities, and these inequities are not good for society. And if they're not good for society, then they're not good for business either. And therefore, that's what we mean by strategy and society. What we are focusing on, more and more companies today are thinking about shared value. How do we create shared value? Value for the business and value for society, not through greenwashing and stuff like that. I mean, Pepsi and Black Lives Matter, that's complete bullshit, right? There is no sense at all, right? So that's right. Okay. Do I have any questions? Yes. I think, for me to get into what should it be for a consulting company, what should it be from for an IT company is you can use the same tests. I've actually worked with some of these professional services firms in helping them think about their strategy, but it's hard to get into that in a few minutes. But we've actually used these tests very successfully. For example, with Ernst & Young's tax business, and saying, what's your tax strategy, right? And so you could do this for any business. You can use these some of these tests. Can't operational agility come from standardization? I think some of it will come from standardization. I think that gives you some scale. But what you also then need is this. So here's something. What you need to think about when you go the standardization route is think about what happened to all the large FMCG businesses. Many of them have been losing market share to the smaller DTC, direct to consumer businesses, right? P&G did something quite interesting recently. They said, okay, we are going to actually be as fast as some of these companies. So they started last year, they launched a product called Microban. Okay. Microban in its first year hit about, it just happened to be also the right product at the right time, but it hit 200 million in revenue in its first year. That's a massive hit. Only 5 people. They did not use their own manufacturing. Everything was outsourced. That's one way they created agility. That's one way they didn't use their own facility. Previously, a Procter and Gamble would never imagine doing that. So that's an example. So you can have standardization maybe in your own plants, but build flexibility by using others' resources. Are they, I don't know if it is recorded. I'm not really sure if it is recorded. I really don't know if it's recorded. I don't know if it's available on the website. I think if you've registered, you get a link for it. My apologies. I wish I knew an answer. I should know the answer, but I don't. Strategy at the function level, is there a threshold in terms of size? If you have 165, I would be very careful in designing too many strategies. You got 165 employees, then just have one. Maybe you'll have for different product lines, and that's about it. Okay, don't go. You got 6 people in marketing. Don't bother. Right. This is if you're a large global company with lots of geographies, and you got hundreds of marketing people, then you might do that. Otherwise, why don't do that? Right. Most important, the simpler you keep things, the faster you will be able to move. Very good, folks. What will test number 8 be? I don't have. I thought 2020s is going to be a new test. I actually was thinking about that. And I said, what is the dominant theme that people are talking about today? Because disruption has now been there for 20 years. It's accelerated. And we have all types of disruption, right? Today we have lots of disruption on the political side, the trade side, but that's what the agility concept is, right? So can I reallocate my portfolio? Can I do things so I don't have all of my manufacturing in one location? That's the agility piece that you think about. So that's why my view is 2020s, there is no reason for an 8th test, because strategy and society, which is creating shared value, bringing a little bit more equity, thinking about those things, the UN 17 SDG goals, that's sort of becoming dominant, right? Activist investors are even forcing companies like the Exxons to change how they do things. That goes back to purpose. Think beyond a single stakeholder. And maybe we should put it, does your strategy address multiple stakeholders? Maybe that's the 8th test. Does your strategy go beyond one stakeholder into multiple stakeholders? I didn't call it as a separate test, but that would be an 8th test. Or does your strategy create shared value? I think the duration of a strategy, usually, it's about 3 years. Maybe you build one, unless you are into very, very, if you're Boeing, you're Airbus, and you're thinking about product development, that takes longer horizons, right? But otherwise, you're thinking 3 years, and you change. Is the market dynamic? You change, right? If you include multiple stakeholders, how do you control? No, I think when you think about multiple stakeholders, here's what you're thinking about, right? In today's social media world, you will get attacked very quickly. And You may think it's not a big deal, but for Siemens, for example, it's a $25 million investment in Australia. That was horrible for the environment, tied up the Siemens CEO's time for 2-3 weeks in a year. Think about it, 25 million. This is a company over 100 billion. You don't want a CEO spending 2-3 weeks in a year on something that could have been avoided. So when you think about making your investments, you're asking questions around the environment. You're asking questions around, are some people being unfairly treated? So you're thinking all of those into your strategy design upfront. That's really what we mean. Okay. So slide on the brief history of strategy. Here it is. Excellent, folks. I really thank you all very, very, very much for attending this. We deeply appreciate it at IMD. And, good luck to all of you. I think, thank you again. I really mean it. Lots of positive comments. And so, yes, sustainability will impact strategy. So good luck. Thank you. Namaste.